Which is it? Go flat, increase, go down? What are we going to see?
You know, I used to get paid to decide what was going to happen to certain stocks in the market. I got paid more than I get paid now. I'm not going to do that. I think that there are some interesting drivers, though, that may govern what happens to these companies and their revenues. I mean, I can't predict that a company that blows free cash flow like a tire fire like Tesla is going to have a great reaction to the stock market. But I think when you look at the underlying fundamentals, there's some interesting developments that could come in the coming year, and I think that one of them we're going to hear about from Congress. Really, it's all the discussion right now, and that is the tax bill. I think the lowering of corporate tax rates, in as much as it leads to any R&D spending, it will certainly lead to buybacks and dividends and companies taking care of their shareholders and executives taking care of themselves. But when companies spend on themselves in R&D and in CapEx, they're going to do it in enterprise software and hardware. So I think the potential is there for companies like Cisco, companies like VMware, companies like Oracle to get a great benefit from all sorts of companies looking to spend money on IT and use enterprise technology to get to a better place.
So, David, Facebook, Amazon, Google led the rally this year. Next year, which one of those companies do you think is going to have the most interesting story?
Well, I think Facebook will have the most interesting story, but it's an extraordinarily complex story because I think the pressure on them to own up to some of their social impact is going to get greater and greater. That's going to be interesting. Meanwhile, I also expect the ads are going to continue pouring in and their money in revenue and profit is going to continue to do fine, and probably the stock as well. There's a little question of whether the regulatory pushback that I see as inevitable against all three of the companies you mentioned could have a financial impact and an impact on Wall Street and the perception of investors. So far, we haven't really seen it, but I think it's inevitable. It's a matter of when. But I would just also add to what Cory said before. I would add Salesforce and Microsoft to the list of companies that could be beneficiaries of a turn towards sort of technologization across the economy as the tax bill gives companies more money to spend. Really, the entire economy is becoming a technology economy, and that should benefit investors in industry after industry, even beyond the ones we think of as tech.
And let's not forget, we've had a NASDAQ up 29% this year. If you bought stocks in the scariest time, you bought NASDAQ, just the NASDAQ index, just a flat-out index, this time in 2008, when the world was coming apart at the seams, the depths of the financial crisis, this brand new Obama administration with this rookie president trying to figure out what to do to save the economy from itself, we've had a 337% return in NASDAQ in the tech-heavy, cliche out there, pardon me, cliche alert, but the tech-heavy NASDAQ, 336%. The notion that you could have more than tripled your money on that date in this short period of time is simply amazing.